Did you know that art is not only something we hang on our walls or admire in museums, but it can also be one of the most lucrative investments you could make? In fact, art has been quietly outperforming stocks and bonds, giving investors not just financial returns, but also a piece of history. But here's the real question. How does something so intangible, so personal, become a reliable investment? Is art just about aesthetics, or does it really hold its ground in the financial world? Can art provide stability in times of economic chaos, or is it just another speculative bubble? In this video, we're diving into how art isn't just a creative expression, it's an asset class. And I'm going to show you why owning art is more than just a way to beautify your space. It's a powerful investment strategy that can safeguard your wealth and even increase your returns. Let's break down why art has gained so much attention in the investment world and how you can start thinking about it as an asset. Art's dual nature as an investment. When we think of traditional investments, we usually picture stocks, bonds, and real estate. These assets exist in digital form or in documents that can be transferred easily. But art, well, art is different. Art is something you can see, touch, and experience. Unlike stocks, bonds, or even real estate, art has this unique physical presence that makes it a blend of both a cultural treasure and a valuable asset. Art represents a cultural or historical significance, making it valuable in ways money cannot measure. For example, a single painting by an old master carries the weight of centuries of history, while a contemporary piece reflects the current cultural zeitgeist. Art isn't just a financial transaction. It is also a connection to something much bigger, much deeper. Yet, it also functions as an investment, growing in value over time. This dual nature is what makes art both an emotional investment and a financial one. While art is sitting in your home, it's not just something to admire, it's growing in worth. And just like any other asset, its value is driven by a range of factors that we'll explore in more detail. But unlike stocks that are often affected by market swings, or bonds that are influenced by interest rates, the art market tends to operate independently from these fluctuations, giving investors a sense of stability. This could be a reason why some consider art a safe haven investment. The physical nature of art gives it inherent value that often remains intact regardless of stock market volatility. While markets may plummet, art's value doesn't always follow the same patterns. In fact, some high-end art pieces increase in value, sometimes independently of economic crises. This makes art an attractive alternative to more traditional financial markets, especially for those looking to diversify their portfolios. Factors influencing art's value. So, what makes art valuable as an investment? Why do certain pieces fetch millions of dollars while others stay in the thousands? It all comes down to a few key factors. 1. Rarity. The rarer the artwork, the more valuable it becomes. Limited editions, one-of-a-kind pieces, and works from renowned artists tend to command a higher price. Think about Picasso or Van Gogh. These names are synonymous with rarity. And when a piece of art is rare, it becomes more desirable, driving up its price. The fact that only a select few can own a piece adds a sense of exclusivity, which further boosts its value. The art world thrives on scarcity. Just like with fine wines or rare diamonds, the fewer the supply, the higher the demand. In fact, some of the world's most expensive pieces, such as Picasso's Les Femmes d'Alda, have fetched astronomical prices precisely because they are irreplaceable. As time goes on, the rarity of these masterpieces only grows, making them more valuable. 2. Artist reputation. The reputation of the artist plays a huge role in the value of their work. The more famous or respected the artist, the higher the price their artwork can fetch. An artist like Banksy, who has an aura of mystery and cultural relevance, can see his art sell for millions, even though his works are often street art or graffiti. In the same way that the stock market rewards well-known companies with higher share prices, the art market rewards recognized artists. Their established name adds an automatic premium to their works. But artist reputation doesn't just grow overnight. It's the result of decades of exhibitions, recognition from critics, and demand from collectors. This is why investing in the early works of emerging artists can be a high-risk, high-reward strategy. 3. Provenance. Provenance refers to the history of ownership of the artwork. If a piece of art was owned by a famous collector or displayed in a prestigious museum, its value increases. The story behind the artwork, who owned it, where it's been, and who's interacted with it, adds a layer of authenticity and intrigue that can push prices higher. Provenance acts like a certification of authenticity, assuring buyers that the piece is genuine. For example, the ownership history of a painting by Rembrandt or Vermeer, tracing it through private collectors or public institutions, will dramatically increase its value. Provenance can also elevate a piece's cultural relevance, as collectors desire works with unique backstories. In this sense, art becomes not just an investment, but a part of cultural heritage. 4. Condition. Finally, the condition of the artwork is critical. The better the preservation, the higher the value. Art that has been well cared for and is free from damage is considered more valuable than one that's been neglected or poorly handled. This is where the care you put into maintaining your art can make a real difference in its future value. Imagine buying a vintage car or an antique. Its value is largely based on its condition. The same logic applies to art. Restoration and conservation are crucial in preserving the value of an artwork, and collectors often pay a premium for pieces that have been kept in pristine condition. Museums and galleries spend substantial amounts of money ensuring their collections are preserved and properly displayed, and for good reason. Condition directly impacts value. Each of these factors contributes to the price an artwork can command on the market. But there's something else that plays a big role: timing. Art's value can fluctuate based on trends, market demand, and even shifts in cultural interests. For example, works by modern artists may go through periods of increased demand, especially when there's a resurgence of interest in certain art movements. Similarly, artworks linked to a specific historical period or event can see their value skyrocket as public interest rises. Art versus traditional investments. Now let's compare art to more traditional investments. Traditional assets, like stocks and bonds, are often seen as the safer bets in terms of generating income. Stocks pay dividends, bonds provide interest, and real estate can yield rental income. But with all these traditional options, there's a common risk: volatility. The stock market, for instance, can go up and down dramatically. Bonds may be affected by changes in interest rates, and real estate can suffer during economic downturns. But art has something that sets it apart. Its value doesn't always correlate with the ups and downs of the financial markets. During economic crises, while stocks may plummet, art often holds its ground. People continue to collect and appreciate art, and the demand for rare or historically significant works remains stable. The world's wealthiest individuals, for example, have long seen art as a secure investment. It offers diversification, reducing the risk that comes with a traditional, stock-heavy portfolio. In fact, art can often act as a hedge against inflation. When inflation drives down the value of currency, tangible assets like art, which have intrinsic value, often rise. Just like real estate or gold, art is something you can hold on to, and its value is protected against economic uncertainty. The personal satisfaction of art investment. But let's not forget the most unique aspect of art as an asset: the emotional and personal satisfaction it brings. Unlike stocks or bonds, which can be abstract and detached, art has a physical presence. It's something you can look at, admire, and interact with every day. Imagine owning a painting by your favorite artist, one that brings you joy, inspiration, or a sense of connection to a moment in time. Beyond the financial benefits, art can elevate your living space, giving it personality and depth. Owning a piece of history, a cultural artifact, or an iconic work of art can be incredibly rewarding. It's not just about making money. It's about the pleasure of having something beautiful and meaningful in your life. The personal connection to an artwork enhances its value in ways that no stock or bond can replicate. Every time you look at a painting or sculpture, you're reminded of why you purchased it in the first place. Not just for its potential financial gains, but for the joy it brings into your life. Art is a unique asset class because it offers the best of both worlds: financial growth and personal enrichment. In conclusion, art is not just for museums and galleries. It's an asset that can grow in value, stand the test of time, and diversify your investment portfolio. From its dual nature as both a cultural object and a financial asset, to the various factors that influence its value, art offers something unique. Unlike traditional investments, art's value remains relatively stable, and it provides a level of personal satisfaction that no other asset can offer. If you're looking for an investment that offers both financial rewards and personal enjoyment, art may be the answer. So why not explore the world of art as an asset? Start learning about the artists, the pieces, and the market trends. Who knows, your next masterpiece might just be a click away.